Hello everyone. In this video, I will be discussing about the topic rules and regulations governing bank lockers in India. And I will be dealing mainly with the new set of rules and regulations that are issued by the RBI and which are in effect from January 1, 2023. So in this particular video, I will be explaining in detail which are these new set of rules which are issued by the RBI and why are these rules issued by RBI. So let us start. First and foremost, it is very important to understand what a bank locker is. A bank locker is used for depositing valuables like gold, jewelries, other important documents, etc. And it can be hired by anyone. It can be an individual, it can be firm, it can be a company, or it can be a trust. And a locker can be of variety of sizes. It can be small, medium, large and extra large. And the rent of each locker should be based on the size. That is, the rent of each locker shall be on the basis of the size of the locker. Now, how can we access a bank locker? A bank locker can be accessed by two keys. One key shall be with the customer and the other key shall be with the bank. And for accessing a bank locker, each key shall be used simultaneously and it is very important. Now let us move on to this new set of rules governing bank locker in India. First of all, who makes these rules? These rules or any rules governing the banks in India for that matter, are made or issued by the Reserve Bank of India or RBI, which is the Central Bank of India and is also called Bankers Bank or Banker to Government. Now, RBI on its list of guidelines for banks have issued these new rules governing bank locker in India and it is in effect from January 1, 2023. Now, who does it rules apply to? These rules apply both to the new safe deposit lockers and also to the old safe deposit lockers and other banking facilities. Now, why is this set of rules formed in the first place? For three purposes. These set of rules have come into force for three purposes. The first purpose is the efficient management of safe deposits. The second purpose is for transparency. And the third purpose is for strengthening the security of bank lockers in India. But the main reason why these guidelines are issued by the RBI is because of a landmark case, which is Amitabh Dasgupta versus United Bank of India. This was a landmark judgment decided by the Supreme Court of India on 19 February 2021. In this particular case, the court clarified that the relationship of a banker and their customer with regard to the locker facility will be that of a bailer and bailee, and in such cases the law of bailment will apply. The court also directed the Reserve Bank of India to issue comprehensive guidelines in order to mandate the steps taken by the banks for locker facility management within 6 months. And during these 6 months, the court clarified that during these 6 months, the decision held by the court shall be applied to all the banks. Hence, this is the main reason why RBI issued these new rules and regulations regarding bank locker facilities in India. Now let us try to understand what are these new set of rules one by one. And in this particular video, we are only going to discuss what are the most important rules that are issued by the RBI. So the first one is agreement on stamp paper. The new locker agreement needs to be made on a stamp paper, and as per the guidelines, the banks are advised to facilitate the execution of fresh or supplementary stamped agreements with their customers by taking measures such as arranging for stamp papers, e-stamping, etc. And a copy of the furnished agreement shall be provided to the customers also. This is for the customers or the locker holders to understand their rights and responsibilities. And the original agreement shall be retained with the bank's branch where the locker is situated. Banks should ensure that any unfair terms or conditions are not incorporated in their locker agreements. Further, the terms of the contract shall not be more onerous than required in the ordinary course of business to safeguard the interest of the bank. Now, the next rule, the FTs for locker. As per the guidelines of the RBI has allowed banks to seek fixed deposits at the time of the locker allotment. Now, these fixed deposits should be capable of covering 3 years' rent and charges for breaking open the locker if needed. This covers situations where the locker holder neither operates the locker nor pays the rent. However, banks cannot break open the locker in case of customer with a good track record. Also, apart from that, if a bank collects locker rent in advance but the locker holder surrenders the locker midterm, the bank will have to refund the proportionate amount of advance rent collected. However, the banks are not allowed to obtain term deposits from existing locker holders and also from satisfactory operating accounts. The key idea behind this is that these provisions will guarantee the prompt payment of locker rent. The next rule is regarding the discharge from liability, and here we are talking about the bank's liability. So the responsibility for deterioration or damage caused to the contents of the locker caused by natural disasters like rain, flood, earthquake, lightning, or civil disturbances like riot, terrorist attacks, or most importantly for negligence of the customers, the bank will not be liable, or the liability will not be borne by the bank. But however, in the fourth rule, that is the compensation in case of theft, fire, etc., it is the responsibility of banks to take all steps for the safety and security of the premises in which the safe deposit vaults are contained. The bank will have to compensate the locker holder in case of incidents like fire, theft, burglary, robbery, dacoity, or when the building collapses, and in most important cases, by the negligence of the bank or by fraudulent activity by its employees. And here, the bank's liability will be equivalent to 100 times the prevailing annual rent of the safe deposit customer. Now, in case of alert for locker access, every locker holder shall register their email ID and mobile number with the bank. Now, this is because the banks will send an email and SMS alert intimating the date and time of locker operation, and the banks will also provide the redressal mechanism for unauthorized locker access. Hence, it is very important that every locker holder shall register their email ID and phone number. Finally, I will be explaining certain other guidelines that are issued by the RBI. The first one is that the banks must give notices in 2 newspapers while also notifying customers at least 2 months in advance in case of a relocation of the bank branch, a merger, or a closure. In such a case, the bank must also give its customer the choice to close or change its facility. Moreover, in case the locker rent is obtained in advance, the proportionate amount must be given back to the customer in case the account is surrendered. Additionally, the locker agreements must make it clear that the bank is not under any liability to insure the contents deposited in the locker in case of any risks whatsoever. It must also make it clear that the bank does not hold any records of the locker contents. An interesting provision here is that the banks are not allowed to provide any insurance products to their customers to safeguard the locker contents. Now, that was all about the topic rules and regulations governing the bank lockers in India. I hope this video was helpful. Thank you.